Good morning and welcome to Trading with Larry. Larry Benedict, joined by the three-headed monster, Clint Brewer. Thank you for showing up today. I needed you today. And Eric Shamilov, who's telling me what I am every day. Are you bullish, bearish, whatever? Anyway, today is Trend Thursday. Okay. We got a lot of trends to talk about. But it's an amazing thing. I want to get big time into the Fed, but it's an amazing thing. Yesterday, there was nowhere to hide. Okay, everything got annihilated. The Dow was actually, I was surprised because usually they hide in that. That was down 1,000. Okay, S&P after the close down 150, almost 2%. Nasdaq down over 3%, and then somehow Microsoft is the new place they're hiding. I don't know if that's going to work for them. But what I will say before I get everybody going here is this day it's shocking and it's a 10-star short. Okay. They're not going to pull the same nonsense they pulled last month. I don't know if we want to pull a chart, but last month the market was down 5% going into the last 2 days. Everyone crying and dying, and then they ran the market 5%. Well, Nasdaq's down like basically 10% almost for the month, or maybe a little more. And how are they going to save this one? And the selling that I saw and have been seeing is real, and the buying is actually. I mean, Eric pointed this out. I don't know if it's actually 100% factual, but retail flows, he said, were into Nasdaq. I don't know how, but anyway, I want to throw it to you guys to get into the Fed. But before I do that, you know, I what shocked me the most about the Fed, and I said it before, and I want to throw this out to my kids because my kids call me Old Man Jenkins because they think I'm like an old man. So I'm telling you, the Fed is Old Man Jenkins. Okay, it was like 9-3 against. This guy wanted to raise rates so badly, but he can't control the Fed. So that's really what I'm looking at here today is that the young guys want to raise rates and they know it's right to do. And then they got Powell and four of his buddies saying, we're not giving it to you, man. We're going to make you sweat. And that's where we're at. So I'll throw it to you guys. And I think it's very, very bad for the market because they know what they need to do. In the next meeting, they probably won't even be able to do it. So I'll throw it to you.
I'm just checking the ages of the people that dissented. But is the is the Warsh honeymoon over?
I think
Because
it's
there
out
was
of
a
the.
honeymoon. Everyone was putting this guy up on a pedestal. Everybody had an opinion. It's weird. Like everyone I talked to had an opinion about Warsh, and they had like both opinions running at the same time. He wants to reduce the balance sheet. He wants to raise rates, and then they'd say, well, he thinks AI is going to be deflationary, and he wants to lower rates. I don't know. I think yesterday we saw how the honeymoon is over, and
But can I ask you a question? Why? He can't control the Fed. Do you understand that? And all he wants to do is not tell anybody anything. So he didn't answer anything. He's like, oh yeah, we're going to raise rates later or whatever. I mean, he can't do it. They wanted to do it at this meeting.
well, he said something very big. I think he's like, his stance was 2% inflation target or bust. He's like, not 2.3, not 2.5. And when the reporter, and he had the whole meeting going well, the market was rallying, right? They didn't cut rates. The market was rallying.
So the
The press
market
conference,
was still timeout. The market was never up at any point during the day. Okay. If they loved what he said, the market would have been up. NASDAQ was down 300 points and ended down like 700. It rallied a little, but we were never up. I just want to be clear on that. We were not up.
we
Like,
okay. Well, we were the
coming back.
reaction to
I
o'clock.
understand, but they always want to buy.
Whatever the point is, as soon as the reporter asked him Well, then why? Okay, if you want your target of 2%, why aren't you raising today? And I think that's when he lost the room, and the market just started falling.
Eric, I'm going to throw it to Clint after this because he's patiently waiting. But Eric, he can't raise rates. It's a committee vote. He wanted to raise rates 100%. Okay? He's wanting to raise rates. The committee is not allowing him to raise rates, which is 10 times worse than anything he could say or anything out there. Okay? They may not even be able to raise it the next meeting. Okay? Because it's not about him. It's about these other old man Jenkins on the committee that don't want to move and just want to sit and do nothing and collect a paycheck. But I'm going to throw it to Clint. I'd like to hear your thoughts on the Fed and anything that you're thinking this morning.
Sure. Well, Larry, I'm going to Dissent. All right, here we go. I think they're 100% raising at the next meeting. I found it very interesting that Warsh said he talked basically about how it was like a family argument at the dinner table. He said something along those lines about the meeting. So it's a new Fed where instead of trying to build a consensus, there could be disagreements at the table, but when they go out to the public, they would try to look like they were unified in what the decision was, that a decision was made and everyone bought into that decision. Now it's what's your opinion, and we're going to go with that. You voice your opinion. You can hold your opinion. You can disagree, and we'll disagree. We'll agree to disagree publicly, and that's what the dissent was. The agreement to disagree publicly. And so everyone now has a voice. They're not trying to form a consensus. They're not trying to be unified. And so that's part of the whole, communication issue that the market's going to just have to come to grips with now, because there's no more forward guidance. There's no more trying to broadcast what you're going to do before you actually do it. I would put some decent odds on if we get a hot inflation report before the next Fed meeting, do we see a surprise rate hike? Harken back to the, a lot of comparisons to Volcker, back in the Volcker days. I mean, there was, what was that surprise weekend meeting at the, or I can't remember what it was, or maybe it was like a Wednesday night or something. But I mean, if he wants to take the market by surprise, that's one way to do it. But hold on, wait, I'm not done. Because all this talk around the market, the biggest thing that happened yesterday was in interest rates. I did not, there was a lot of knee-jerk reactions. Yeah, I think S&P went up briefly, green on the day before Warsh started talking, pulled back. I'm going to pull up a chart really quick, and then I'll be done. This is the 30-year interest rate. This is the biggest thing I think happening.
20-year high. 20-year high.
20-year high, and it's tried to break out before. Now it's holding the breakout. So here's the 30-year. This is a long-term chart. This goes back to this is 2023. All right, so that's how long we've been forming this base for. I mean, this is, you call it an ascending triangle, and you usually want to break this to the upside. Well, we poked out to a new high right there, as you can see. You had the TLT ETF that tracks the price of the bond, so it's going to move inverse to yields. Was down. I mean, it was down over 1.5% yesterday. I mean, that's a huge move for TLT. This is a huge move for bonds. And if there's one thing that could come out and continue to pressure the AI, Mag 7, hyperscaler, whatever the hell you want to call it, tech trade, it's this move in the long bond that could bite right here.
Listen, I'm 100% in agreement. It's funny. I have a sheet of paper here, and I literally listed things I want to touch on, and that was coming up next. Nobody's thinking about this. Nobody's looking at this. I don't know why, okay? At some point, a wealthy person will say, hey, listen, for the rest of my life and my children's lives, I could lock in 6% and never have to think about this crazy equity market that is so overvalued that it's not even to be believed. I'm telling you. So, and to see the move today is such a scam. I mean, it really, really is. I mean, listen, it is what it is. And somehow Microsoft saved the day. I don't know how or why, but it's one of those things where they're selling Meta to buy Microsoft or whatever. My question that I have for you guys is this, and I was really, it almost kept me up last night. Why are these companies throwing this kind of cash into these AI build out BS crazy things that have shown no validity of anything yet? Zero validity. Okay, it's going to be so many years before this happens. I feel like Mark Zuckerberg is like, he's a kid. He's like a drunk sailor. He went into the metaverse, lost trillion there or whatever, wrote it down. Now he's all in here. They have no cash. They're going to have to keep raising money. I don't know if they're going to float equity. I don't know what they're going to do, but they're running out of money. Meta Labs lost what, $5 billion in the quarter? it's sick. I'm just saying, sick. So my thing is, like, Microsoft stays in its own lane. Apple, which everyone was criticizing Apple, that they didn't get involved in this nonsense. Well, Eric, guess what? Apple's the most valuable company in the world again. Okay, and it should be, because it's not involved in this nightmare. Dude, between this and flying.
Wait, is it actually the most valuable company in the world?
Yes.
I know. I believe they took the crown back.
From Nvidia? Nice. I didn't even notice that. It's pretty interesting.
Well, why do you think that is? Because they're not doing this BS. Okay. And Nvidia, I mean, I don't know what it's going to do. Today I can't tell you, but Nvidia is a short. It's going to break the 160 level on earnings, I think. But I'm very surprised with the market doing what it did yesterday with what I would call real selling. I mean, real selling across the board in everything. Okay. That the market is up, 40, 50 handles on the opening this morning, I think is a fade. You say, oh, I don't think anything. Well, I think you could fade this with upside options. Straddle's pricing pretty high today. I saw when I woke up, it was $50. So, if they thought this move was going to stay, I don't think this thing would be $50. I'm just saying, we would have a $30 straddle or $32 straddle. But
we had a 70-point straddle at the close yesterday. 70-point.
Well, a lot of that has
already moved 70 points from the close of the future session, or not?
Eric, anything can happen. I don't know, but it was $70. It wasn't even 70. It was lower than 70, but it was in that area. But it's because of earnings, and it's because of the close that we had. They weren't really that worried about the upside as much as they were worried about covering the downside. So that's what I see with that. Market can't come off the high, which is interesting. It's one of these days where they're going to try everything to try to bring it back for the month. I don't know why, but we'll see if we hold.
I just want to say something about Apple and Nvidia you brought up. So this is the credit default swaps on Nvidia top panel, Apple lower panel. So yeah, obviously bond holders are concerned, but they're also concerned about Apple. Apple CDS has also been rising. Just wanted to point that out. So I think there is a AI concern in there.
Maybe. I mean, let me ask you this, okay? Lehman went under, Bear Stearns went under. Those companies weren't even 50 billion. How is a $3 trillion company going under? I mean, or even a 1 trillion. It's literally impossible. So
why are bondholders nervous?
Well, because, dude, it's a trade. They're just making them pay the piper. It doesn't mean they're not going to pay. I mean, if they don't pay, the market.
Yeah, but if you're a bondholder in like Nvidia, like what's the interest rate you would have gotten on your bond? It probably 10-year note plus a very small premium, right? Nvidia's AAA rated and all that.
Listen, I remember when rates were at zero back in the day. these companies like Apple were floating like perpetual, like 30-year paper for like 2%. People were buying that. So all this is a trade, Eric. People are hooked in it. It's kind of like the housing trade back in '08. It's basically just going out. Nobody wants to own this stuff. So, if you want to sell, you have to pay it crazy. You have to get out at crazy.
So Nasdaq already up one standard deviation today, and at the high of the day. When are we fading? Are you fading this move today or what?
I am going to sell upside options. Yes.
So let's talk about that. Which ones are you looking at?
I don't know, dude. I don't want to talk about what I'm trading right now because I don't know exactly what I'm going to do. I got to see where we open. Subscribers to the Opportunistic Trader will get it. So if you want to hit like and subscribe to the channel, that's great. And if you want to look at the services, that's better. But right now, I don't know where we're going to open. We have 30 minutes. We could be on the high or we could come in 25 handles. I don't know. So right now I'm not doing a trade. I'm looking to do a trade. So, I would say $30 to $50 on the upside. And then if and when the market comes in, maybe 50 on the downside, or 60. I'm not that comfortable. And what I'm not comfortable about is that it's the same trade over and over and over. I mean, Clint, I don't know if you can lay out the end of last month and what they did to the market. Same thing they're trying today. I don't, I just don't know.
Yeah, I was going to pull up. So, I mean, I agree to fade this. I mean, I was going to pull up a chart of the Qs here really quick to look at, because this is something we wrote up recently for Larry's e-letter. We plotted out kind of the scenarios for the Qs right here. And I just want to highlight a couple levels. So last week, as we were breaking this down trend line, we published an update, which this is completely free to subscribe to the free e-letter. But we looked at the Qs, the breakdown of this triangle pattern. So really, that started forming kind of what you're talking about, Larry, at the end of, or actually this was at the end of May. At the end of May, beginning of June is when we had the Qs peak out, trade inside this triangle. A lot of times what you see is a break to the upside if this looks like a continuation, but we had a breakdown, and this was kind of the classic back test where you break down, you come back and you back test that level. And there's really two areas right there. You had that trend line and you had the 50-day. And that's what we pointed out. There could be a short-term trade here to trade that rejection lower, which is exactly what we got. I think we come back to test the 200-day. I think the 200-day right now around the 640 to 645 area would be a good target for the Qs. And I think today's price action is going to say a lot about if we continue to extend lower. A hallmark of a bear market is a strong open and a weak close, right? So, we got the Qs looking to open about 160 basis points higher. How we close today will be very telling on reaching that objective if we want to extend on down.
Well, you know what I'd like to say in that chart? Like, I was looking at it last night, actually, and I was going back to, 650 on the QQQ. Literally, every single person that has bought QQQ, unless you bought it basically in 3 days as it made the low, you are down money. And that's from April 27th. Okay. That's a big,
Larry,
yeah.
Larry, I have a stat for you. I want to get your reaction to this. All right. Mm-hmm. On Wednesday, the Nasdaq 100 fell into correction. So 10% peak to trough decline from the early June highs. So Nasdaq 100 in correction. Our RSP, you talked about this yesterday, the equal weight S&P 500 index, RSP on that same day made a new closing high. The last time the Nasdaq fell into correction at the same time the equal weight S&P was making a new high was in March 2001.
Exactly. I was about to say 2001. And for our subscribers out there, I hope they got the alert that we got everybody out of that thing before this little bit of a fiasco. Um, so I don't, you know what? I've said this to Eric all week, and I'll say it to you. Okay. The Nasdaq was completely underperforming the S&P, right? They were hiding in the S&P, okay? And now look what's happening today. You know, Eric was giving me a hard time that I kept saying, you know, you should buy Q over S&P because the only way the
Yeah,
market
how would that have done yesterday? That was okay. Now it's like 2 days later.
yesterday to today, this morning is 2 days. Okay. What are you talking about? Dude, that trade is up almost 1%. Okay, come on. But the only thing I'll say is that's the only way the market can ever rally, ever, is if they're buying crazy, you know, Mag 7, NASDAQ, wild, crazy stocks. And it's disgusting. It's just after yesterday's close, okay, to see this and to see it on the second to last day of the month, what do you think this is? Them trying to save themselves. You don't agree?
I had some phone calls with a few retail buddies, and they were all looking to buy SanDisk call options 200 points up last night, calling me up, asking me about SanDisk options 200 points up, which are, by the way, priced at around $75.
How can they buy them?
So I think, look, I don't know, retail.
Eric, can I say something? I'm going to try to remain calm. Okay. I ran a hedge fund with $1 billion. Okay. I wouldn't even trade an option that was trading over $15. What are they? It's like it's so reckless. And I wanted to talk about,
Yeah.
you know, I wanted to talk about the Korean ants. You know, no one's talking about Korea, but that market went in half. Okay. Touchdown Tommy has a guy that's writing MU, okay, structured notes with a 40 or 35% downside. Well, guess what? It's down 40% plus for the month. Came back a little, but it was down over 45% for the month. So I don't know what's going on here. I don't know how these people continually have the money to buy. And it's like, it's crazy. It's like a ridiculous, you don't even like the market. I mean, what's the
Why do
key?
they need money to buy? You could buy one. They're looking to buy one contract. You know,
But that's not, I mean, whatever. I mean, you should tell that guy to get a real job. What's he going to make?
well, the point is they're looking at the dip and they're like, okay,
Eric, they're buying, you just said they're paying $75 for an option, $200 out of the money. They need that stock to rally $300 to make
yeah,
money. Okay.
yeah.
That guy needs to find a job, okay, doing something else, okay, because he ain't going to win. But what I'll point out to everyone watching today is this month is a prime example of retail getting run over, okay? And then on top of retail getting run over, what I'm seeing, and you know, I don't know if you guys are seeing this, but I'm seeing actual real selling. This is real selling. What you saw for the last 4 days until yesterday was everyone getting out of NASDAQ and buying the S&P, thinking the S&P was a utility stock. Okay. We talk about it on the podcast every day. Okay. Well, that jammed up their you know what. Okay. So they're losing on that. They're losing on everything. The crazy thing is to have a Q opening like this morning is insane because, like Clint said, we're going to touch that 200-day, go below it. But what's more meaningful for me today, okay, looking at the price now, obviously Q's up 10 figures, you know, they do this like water, okay, but let's say it was where it was trading after the close, okay, it was trading at like 657, 56, okay. I looked at a chart, literally, if you bought, you had to buy in the middle of April, off the dead ass low to be up money. Every single person long Qs is down money. Everyone. So I don't know how they have the moxie after the market opens down 1,000, okay, and Nasdaq freaking out and trading $4 lower after the close to come in and buy stocks right now. You're going to get smoked. They're not doing the same thing they did last month. I actually think tomorrow on the close you're going to see massive stock for sale. If it doesn't happen, I would be surprised. I think this is not a trade about what's happening right this minute, this month. This is people that are real, okay, institutional, hedge funds, whatever, lightening up or getting out of their positions. And what I'll say that's interesting, and Clint hit me with it, and you did. Citadel, who's the biggest cheats on the planet, right? I mean, they get all the information. They were pricing in a rate hike. So I think they probably spoke to Warsh and literally he wanted to raise rates, but he couldn't flip the committee. Because why would that guy come out the day before? You know?
I want to get you guys' opinion really quick. I've got one, maybe two charts that I want to know if you guys are going to be buying or selling this. And it goes along with, it's trend watching Thursday. I think the top two trends this week, one's obviously rates with the Fed. The other's going to be the AI trade with all the earnings coming out. But I want to start with rates really quick. And I just want to show one chart here. And I want to get both of you guys' reaction if you're buying or selling this today. This is TLT. So this tracks long bond prices. And this goes back a ways because I want to show these trend lines. I mean, this goes back to 2023. TLT reliably bouncing off and off each trend line. We had the rejection up here as rates started to rise again. Now you're getting a 30-year string to break out. If I try to zoom in here, this is, here's yesterday's huge down bar. It'll bring us right back to that trend line again as the 30-year string to break out. Are you buying another rebound off this level, or are we seeing a breakdown here? What do you guys think?
I would be interested maybe in this area a little lower in TLT to establish a long position. That I don't feel that comfortable about.
So here's not high conviction.
Well, no, but I think that if we back up more, I mean, how literally, honestly, how is the market even here? Yes, the Nasdaq had a correction of 10%, but guess what, guys? It's still up 10%. Okay, it's not down on the year. We're not freaking out, but it's not macro Monday. But if we overlaid macro on top of this, you would think the market was getting crushed. Okay, it's getting crushed in Nasdaq from an insane level, a level of insanity that is just listen. All you hear is the same thing. Like, I guess they're calling Mag 7 stocks hyperscalers. Like, they make up nicknames, Mag 7, hyperscaler. Like, it's crazy. I mean, and people literally think the market owes them money. Literally. And then you know what happens, Clint? Not yet, not close to yet, but in another 10% in Nasdaq, no one opens up their statements. That's what happens. When it's going up every morning, first thing they look at, people call me, oh, look at my stocks. I have this guy. I should actually get him on our podcast. He's probably the biggest knucklehead in the market. He called me the end of last month chirping about everything. And now I haven't heard from the guy in a month. So that's where, we stand. We're close to wrapping. They have us on a hard stop, even though I want to keep going forever, at 9:15. I don't know if you guys want to close on anything. I saw maybe a question come through. I don't know if it's anything good, but
Micron hit that 700 target. That was the area where it was trading before UBS opted to 1600 and set off an arms race on the sell side. That entire move is now retraced. I think we got ourselves a little reset. So
how about if I tell you Micron is going to trade under 500?
So I would agree. And
under 500. We haven't even seen, listen to me, we haven't seen bad yet. I'm telling you, I've been in this business for 40 years plus. We have not seen bad. We have not seen bad. Okay. You saw a little shaking market on the close yesterday, very little, but we haven't seen bad yet. We haven't seen bad. We haven't seen what I call the holy shit, where we haven't seen bad. And for the first time in a long time, people are getting whacked everywhere. So I'm shocked at the opening. Again, I'm waiting for them to open, and then I'm going to select how aggressive I'm going to be on selling, options. I may even go close to the money. I just don't understand it. I don't. What got so good? Can you tell me what got good overnight? What got good?
Nothing much, but I'm just going to leave it with this chart to answer your question. Nothing got good overnight. And I would say back in 2008, what got good after that first correction in the Nasdaq in the summer of 2008? The market dropped 14%. The Nasdaq got into correction territory, rallied 12% into August, and that was it. So this is a chart from 2008. You lived through 2008. I wasn't professionally trading then. What do you think? Does it feel like that or no?
Yeah, I mean, I'm not going to make that determination right now. I mean, listen, I see what they're trying to do today, but if it starts to fade, I think you can lean into it. Also, we had one quick question. We have to wrap. We're a minute late. Someone asked if I like Boeing. I like Boeing. Okay, I know it hasn't performed well, but I like it. But obviously it's economy centric. But I want to thank you guys for joining me this week. I wish everyone good luck trading. Remember, if the market I'm actually more willing to sell weakness. So, you know, um, that's where I stand. And I am not shorting MU. Someone asked if I'm shorting MU. I'm not. I just think it goes lower. It may breathe for an hour, but this thing is so illiquid. 50 points bid offer is a joke. But anyway, I wish everyone a great weekend. My AMA is tomorrow. Remember to like and subscribe to the YouTube channel, Trading with Larry. And I thank you guys for joining, and have a great weekend.